Welcome back to Royalty FX Academy, where we learn the ins and out of trading when it comes to the Forex market itself, right? The specific details, the strong informations, the bull zones, the ultimate price action that we learn to understand how to buy and how to sell the market accordingly, where to place your stop loss. Okay, all that is brought to you by Royalty FX Academy. All right. Now, if you go on Amazon, you will have 7 books available to you that covers how to buy the market, the setups exactly how they look like with the price action, right? And then you will also find a book that covers the setups on how to buy the market, everything that you need to know, the ins and out, how to sell the market and how to buy the market, individual books that covers how to sell it and how to buy it. And then we have Success in Sight, Volume 1. This is a workbook, okay? The ins and out, how to properly draw your zones, how to draw your trend line, okay? So just like this book says, right? It's a 60-day trading workbook challenge. All right, just keep it to yourself and then not like lock in. By the time you finish with this book, I guarantee you, you will be a master trader. You will understand the ins and outs and how to draw your zone and trend line. So we do have volume 2 also. All right. So each book covers a specific aspect of trading. That way you don't overwhelm yourself. Where this one right here covers everything you need to know and understand when it comes to a bullish market, also known as a buying market, okay, or a uptrend market, where you want to learn how to draw the trend line, the zones, fib placement, the retracement points, the ins and out. All right. Where the next one, volume 2, covers everything that you need to understand about a selling market, also known as a bearish market, okay, a down market, a falling market, okay, the ins and out when it comes to the zones, the trend line, the Fibonacci replacement and retracement. Sorry about that. And moving averages. So ins and out. Again, this is a workbook, volume 1 and volume 2. Very little reading. It's just you putting in the work. Okay. You trace over the zones and then you practice on your own. That way you truly understand how to mark the zone effectively. Of course, that's what we're covering today. And we also have the ultimate price action, the price action that you need to be successful as a trader. All 5 variations, the ultimate price action on Amazon, guarantee you that you will have a 95% winning rate. That I could guarantee you. If not 95, I definitely say 85 or 89. Okay. And then we have the ultimate buying setup. The ultimate buying setup covers everything that you need to understand about buying the market, how the setups look like, the different variations of these setups, and the price action that's available with these setups, and the different variations of the price action that comes with the setup. That way you understand where you just simply read and react. Okay. Now, and we also have discipline paradox psychology, where you truly understand yourself, you master yourself with trading, right? What you practice is what you do, it becomes who you are. That is your psychology. The discipline paradox itself, right, teach you how to understand how to move accordingly. It's not stories, it is detailed instructions, steps that you need to take so you could become a successful and profitable trader. All right. It's not stories about other people, right? It's steps, instructions that you need to take step by step that you can do. All right. And then we also have the ultimate selling, which is the mastering the bearish force, everything that you need to understand about selling the market. The bearish force give you all the top and the best selling setups, all the different variations of double tops, the break and retest based off the higher time frame to make all the money that you need. Even a $1 will give $500. Okay, a $1 lot size will give you that. That's the ultimate stop loss next. All right, that teach you how to properly place your stop loss where it needs to be. Okay, all these books are available to you on Amazon. All you got to do is type in Royalty FX Academy. So everything that you need to learn and understand about trading the Forex market, I have that available for you. Okay. Each one of them is dedicated to one specific aspect of trading. That way you could truly take your time, learn and master trading. But yeah, with that being said, let's go ahead and jump into this. So all setups are that we're going to go over today are zones. To be more specific, we're covering zones, right? The wins. Okay. We're going to cover zones. Ooh, Let's fix this. So today we're covering zones. To be more specific, we're covering bottom zones, okay? We want to first go over our W's, right? We get talking about when, basically, when do you mark the zones, right? Where exactly are we looking for the zones and why we marking these zones, okay? That's why we have this W's for. It doesn't matter which order you put it in, but understanding when market give me a previous low is very important. That way you could mark it, okay? The why follows that. Understanding, okay, I'm placing that zone because market stopped at a specific point and jumped up, all right? And then I'm going to mark it, and that's my reason why, okay? Now, where is the key? What I mean by where is what time frame are you using to mark these zones, okay? You always want to use the highest time frames, okay? So when, where, and why. Where, when, and why. It's very simple, okay? Now, with that being said, we have all rules, okay? That's something I always want to go over every time I do a video instructing you on how to trade, where to trade, why we're taking these trades. So rule number one, when it comes to zones, okay? The first rule is, remember, just like we went over the when and where. So this is more of a where, right? Rule number one is what time frame am I using to mark these zones? Okay. We're talking about the month, which is the highest. Then we're talking about the weekly time frame, second highest, and then we're going down to the daily time frame. Those are the only three time frame that you will be using to mark your zone, because we want to understand where the market is going for the month. We want to see and understand that the market is either buying or selling for the week. Same goes for the daily. So you want to use the higher time frame that's telling you the bigger story before you start marking your zone. So you use your monthly, weekly, and daily to mark your zone. Okay. Now, rule number two. For rule number two, it's what time frame, right, are we using to execute, right? So rule number one, we use it in the monthly, the weekly, and the daily to mark our zone, to identify that setup, right? Now, rule number two is for me to execute that setup, for me to enter in that trade, what time frame am I using to execute, to pull that trigger? That time frame, okay, is going to be your 4 hour, okay, or the H4, okay? We use a 4 hour for a price action. That's the secret behind the 159, that your price action will always be and will be available to you within those time frame, 1, 5, or 9. Okay. So the 4 hour time frame, that's for number two, is where, okay, we are looking to enter or execute these trades. Now, rule number three, okay, rule number three is very, very important. It goes hand in hand with the 4 hour. That's price action, okay? PA, price action, okay? Price action is the combination of the candles, or one or two candles or more, that tells you that market is now buying up, okay? Those combination of candles that indicate market is not going to sell. Now market is going to buy. Those are the price action. Now, due to the fact that we are going over bottom zones, your price action will be the engulfing bar. To be more specific, it will be the bullish engulfing bar. So rule number one, highest time frames you using to mark your zone, month, week, and day. Okay, so the day is the lowest. Now, rule number two, the time frame that I am going to use to actually pull the trigger. That is the 4 hour time frame, the H4. Now, rule number three fall in line because I'm looking for a 4 hour bullish engulfing. I'm looking for a 4 hour engulfing bar. That is your PA, aka your price action. Now, rule number four, which is the last, okay, not the least, but also one of the most important rule, that is your SL. Okay, we're talking about stop loss. Okay, oof. All right, we're talking about your stop loss. So your SL, right? When it comes to your stop loss, of course, we want to use the last low when it comes to buying the market, and you want to use the last high when it comes to selling the market, right? So you want to have these rules checked out. So when you have your trading logs, when you fill in the trading log, that's what you're filling in. Okay. So we're gonna run over this real quick. All right. Make this clean from rule 1, 2, 3, and 4 before we get started. Okay. So when it comes to trading the Forex market or any market in general, you want to identify your setups on the highest possible time frame. That's why we have rule number 1. So rule number 1, highest time frame would be your monthly, your daily. Okay, my bad. Your monthly, your weekly. I'm sorry. Weekly, and then your daily. So these are your highest time frame that you will use to mark your zone to identify the setups or wait for the setups. Now, rule number 2, right? Rule number 2 is the time frame that you are going to wait for your setups to be available. So rule number 2 is the time frame you're going to use to execute, to pull the trigger, to either buy or sell the market. So rule number 2 will be the H4, okay, which is, the 4-hour time frame, okay? That's the 4-hour time frame. So that's rule number 2. And rule number 3, fall in line right after rule number 2, okay? Rule number 3 is price action. What price action are you using to execute, okay? What is it exactly that the market is giving me or showing me that indicate we are now buying or we are now selling? So your price action will be the engulfing bar, okay? It will be the engulfing bar. All right. Now, rule number 4, okay? Now, just so you understand, rule number 3 goes hand in hand because we're waiting for a 4-hour price action, and it goes hand in hand with number 3, which is the engulfing bar happening in the 4-hour. Now, rule number 4, which is the last one, and that is your SL, and we are talking about your stop loss. When it comes to the risk management, how much are you risking? But now, when it comes to your stop loss, you always want to put your stop loss at the last low if you buy in the market. Now your stop loss will go at the last high if you are selling the market. Okay. So these are your rules when it comes to trading. All right. Now let's go ahead and get started with this. Okay. So just like I mentioned before, today we're covering zones. All right. We're covering zones and what time frame are we using to mark these zones, to identify these zones. You always want to use the monthly time frame first, okay? Because that's the highest time frame you have to use, right? And then the second time frame you would use is the weekly, right? And the last, which is the lowest you would ever need or have to use, is the number 3 is your daily. Okay, these are the 3 time frame. A setup that is identifying the monthly will fall in line with the weekly and the daily. It will be the same zone. Okay. A setup that you have on the weekly will fall in line with the daily, meaning if you have that zone marked off on the weekly time frame, when market is at that zone on the weekly, it will also be the same zone in the daily if you go to the daily time frame to see how it looks like. Okay. So when it comes to zones, we only use monthly, weekly, and daily. Okay. Straight to the point. All right. Now, next thing we're going to cover is that way we are aligned with understanding the zone. So since we covering bottom zones, that means we're going to identify the first setup that the market will give me. Okay. Now I'm going to go over 3 different variations of the first setup, which are the double bottoms. Okay. So let's just cover the first one. All right. The first one is one that, well, I guess you could say every trader or any novice trader will know, right? It's the double bottom, but it's not just a double bottom. It's a double bottom that is equal, where the bottoms, okay, are about the same level, okay? Now it's a double bottom because